Good morning, good afternoon, good evening, depending where you are on the planet, and welcome to the Monday, the 3rd of October. Here we go into the fourth quarter. Monday, the 3rd of October, 2022, the Bull versus Bear webinar with Steve Miley on the call here for Trade Day. Welcome, everyone. We're going to go for our usual regular run through today with that slight tweak that we have on Monday to look at the shape of the week, what's been impacting markets last week, what's likely to carry through into the week coming. Even though we're day trading, it's good to have an idea of where the volatility points are going to come further down the line going into this week. So the recap, last week, really kind of two things really going on overall. Was all the fallout from the UK. As I said, all last week, very rare that something like the UK market has a global impact, but it certainly did. So basically, the Friday before, we had a UK mini budget, massive tax cuts, spending plans. Markets didn't like it. Dollar rallied as a safe haven, but particularly the pound got smashed on the downside, pulled the euro and other currencies down with it. Dollar went higher. UK gilts imploded. Gilts, remember, are the treasury bonds. They're the government bond market is the gilts, and they plunged lower in price, higher in yield, and we saw a potential for the next meeting. Even they went in from a 50 basis point expected rate hike, almost up to a 2 percentage point rate hike. It's not pricing that in now for the next meeting that we have in November, I believe. And then that had contagion impacts globally. Global bonds, US Treasury bonds sold off to lower prices, higher yields. Obviously, the dollar rallied and stock markets got hit on the back of it. The Bank of England then stepped in through the middle of the week to try and calm markets, to say they were going to commit to purchasing gilts. That saw the gilt price rebound back higher, back to lower yields, but still significantly higher yields than when we started the week. The other thing was that the Federal Reserve speakers that we had throughout the week remained quite hawkish, and they even referenced the turbulence in the UK markets and said that's not going to put them off their hawkish stride. What was the impact on markets? Well, we saw stocks get hit. The stock indices, the US stock indices and European stock indices went to new lows for the year. They're pushed below the lows from 2022. Where they hadn't broken those lows, they broke the lows last week. And then it was end of quarter as well. The S&P now posting 3 successive quarterly declines for the first time since 2009. So European and Asian equities also lower. US yield, global yields went to lower prices, higher yields. The dollar initially strengthened, then turned around through the middle of the week after that Bank of England announcement. So it was up and then back lower. We'll see this if I go down to some of the charts I've tagged on down here. So you can see the dollar was up, and then it ended actually a negative candlestick. It's still pointing higher for me, but it was a negative weekly candlestick. You had a shooting star candlestick in here for the dollar. And remember, you can download this, guys. This is on the members area. If you go to the members area where I upload the daily technical analysis reports, you also get this. Comes in. Usually, I post this on the Sunday. So dollar certainly turned around, similar with the yield chart as well, similar to the dollar chart. US yields spiked higher, then back down lower after the Bank of England intervened through the middle of the week. And the pound, as we said, hit a new all-time low against the dollar. It was also lower against the euro, but it did rebound through the week after that Bank of England announcement, and was noticeably, significantly up off the lows at the end of the week, but still negative. Gold, well, actually, in my analysis, I'm now actually pointing gold, the pound and the euro higher. It actually has formed a base in there and looks positive at the moment. It was looking at it last night. We also had gold hit another new multi-month low before it bounced after the dollar turned around. Oil hit another new multi-month low, although it spiked higher this morning. We'll talk about that shortly. And copper sold off and then bounced as well. What have we got going into this week? Well, from the central bank side, we do need to keep an eye on these, okay, even though they're not probably front and center for a lot of you guys trading. But we get the RBA, the Reserve Bank of Australia, and the RBNZ, the Reserve Bank in New Zealand, both with their interest rate decisions. They come on Tuesday and Wednesday. And we get Fed speakers throughout the week. That's what we've got on the central banking side. Just to point out, it's Golden Week in China. That means Chinese markets are closed. That can mean, quieter sessions through the Asian session often. But it might mean some increased volatility because we've got a big big chunk of the world market that are not participating this week. So it's Golden Week all week this week. Markets are closed in China. Key data this week, we get the Monday and Wednesday, we get global manufacturing PMI from S&P Global, and we get the US ISM data. So we get the manufacturing data on actually that I've left this line in. You can take that line out there, guys. That top line shouldn't be in. Okay, so that should have been deleted. But yeah, so this is Monday. So we get the PMIs coming out. Have been coming out through this morning. The manufacturing. We get the service sector PMIs coming on Wednesday, an ADP employment change, and then that is the forerunner into the US employment report later in the week. Also EU and German retail sales on Thursday, Friday. But really the focus, the PMI data today, Wednesday, that's the manufacturing and non-manufacturing / services, Monday, Wednesday, and then the US employment report on Friday, always much to watch. If we go and take a look at the calendar for today, you can see we've had the PMIs coming out this morning, pretty much across the board. If you look through there, France, Germany, Eurozone, and the the UK even miss, all in red. Okay, not massive misses, but they're below the forecasts. Okay, so that's certainly negative in here. What have we got coming up for the balance of the day? Well, again, we get that the manufacturing PMI from global S&P Global. Okay, so that comes out at 9:45 Eastern, but the far more watch data is the US data, the US ISM, that's the Institute of Supply Management data. That comes out at 10 o'clock Eastern. So we get the manufacturing data there. 10 o'clock Eastern, that's going to be the focus. But a host of Fed speakers today. Bostic speaks twice, I think, there, and then back down here. We have George and Williams speaking. We also get Bank of England MPC member Mann speaking today as well. So a load of speakers from the Fed and from the bank, then one from the Bank of England today. And then we get that RBA interest rate decision. That's late US time. So it's overnight for me. In Europe, if you're in Europe, it's overnight. So at 23:30, 11:30 p.m. Eastern time, we get that RBA interest rate decision. Just a quick heads up. Here's my. If you don't download it, guys, this is available. So this is the. Some of these levels for day trading maybe a little wider. Remember that I'm sending this out to my institutional clients who are not really day trading. They're more like swing trading. So they're banks and brokers and institutional brokers with a lot of hedge funds as their clients, and also it goes directly to some hedge funds. So they're looking at more of the swing level, so they're not really day trading. So the levels are a little bit wide maybe for you guys, but nevertheless, they still come into play quite often. So, and I'm still negative. You can look in here, look, negative on stocks going. This was obviously last night. Negative on stocks in here. Gold in here has actually failed right at that resistance zone that we looked at. Who were we looking at it for? On who was it? Tony, was that rings a bell? It fell right in that resistance zone that we flagged, and it did set back, but it wasn't a big setback from that on Friday. And then oil in here, I stayed bullish on this. It had a significant setback on Friday, and we have rebounded this morning. So take a look at that when you do get a chance. Right, let's run through what we've got coming up going into the day. So we had some very negative news from Credit Suisse. 5-year credit default swaps, the grades of credit risk rose to records. Stock hits fresh low. I used to work at Credit Suisse. When I left, I didn't think it'd be around 5 years later. It's been 10 years since I left Credit Suisse, but it doesn't look good for Credit Suisse at the moment, and I wouldn't be surprised to see them bought at some point. But that's not really going to impact us. It is having a negative impact on financial markets. The financial sector in here today in Europe. We've had a big U-turn, so this is kind of important news. So the Chancellor has U-turned, and they've dropped plans to cut the tax for the highest earners. So that they're keeping all the rest of it in play, but they've scrapped that plan. It hasn't really done the market too much good in here today. As we look at the FX markets, the pound is slightly up, but only very slightly up against the dollar, so it hasn't had too massive an impact. Gilts have rallied significantly low. We're up over nearly 1.5% on gilts. So the gilt market has taken it as a positive, because obviously it means that there's more The fact that they've taken away the tax cut means there's more money, less of a budget deficit, less of need to supply more gilts to fill that budget deficit. So it's basically a cut in supply. So then effectively it means a higher price. So gilts have gone back higher in price, lower in yield. So that's a positive. At least that has had an impact in here this morning. What else do we have? Oh yeah, so the dollar yen is back up significantly higher, and it's back up close to the levels where the Bank of Japan intervened last month. Last month. It was last month, not last week, the week before, right? Yeah, so a week and a half ago, Bank of Japan, dollar yen pushing back higher in here, so fears that they may intervene again in here, and we've already run through markets mixed. US and stock futures bounced off session low, so we were lower and rebounded this morning. Part of the rebound being helped by this U-turn by the UK government. That helped the markets, equity markets bounce in here this morning. So stocks are kind of mixed this morning, and we've already looked at what we're focusing on today. Fed speakers, and then the data, the 9:45 and 10 o'clock PMI data. So we're going to be watching for those. Let's run through a few headlines. So, I've already flagged this. Wall Street posts third straight quarterly loss. Inflation weighs, recession looms. Big headline grabber on the non-financial press, I should imagine, in the US. Nasdaq's futures hobbled by Tesla weakness. So, pulled lower Monday by a fall in Tesla shares after electric vehicle maker failed to meet quarterly delivery targets. So that's always a big piece of data. They missed the quarterly delivery targets for Tesla, and that's pulled Tesla down this morning, and that's weighing a little bit on the Nasdaq today. Stocks fall, US futures wobble on economic jitters, and the oil price up. So OPEC in here, and so oil prices are OPEC Mo's biggest production cut. So they're talking about cutting, I think it's, I read, is it $1 million, a million barrels? Where is it? OPEC's unfolding a production. It hasn't got it in here, but I'm pretty sure it was around that. So, but anyway, looking for cutting production, far more biggest production cut for some time since the pandemic, and obviously that's means a higher price in here, and that's not good for stocks really. It's just going to feed back into inflation. Yen weakening, we've spoken about that, past 145 per dollar. That's where the Bank of Japan intervened previously. So look, Bank of Japan will take currency action if necessary. But where are we, dollar yen? Just looking at another screen in here. So dollar yen still sitting there around 145 level in here. It is below the intervention levels from previously. We were noticeably above 145, but creeping up there again. So FX players are going to be watching for that. Government tax U-turn, we'll be speaking of that. Not enough to stop pound sterling forward trade as well. Well, it has gone slightly up, but only slightly up. It hasn't had a really big impact on pound dollar in here this morning. Pound dollar had already had a significant rebound after the Bank of England announced they were going to buy gilts last week, but not too much higher in here this morning after the government U-turn. The bit they've taken away, is very contentious in here. Obviously, there was the cutting the higher rate tax for higher rate taxpayers in here. They were doing away with that. So the fact that they've reversed on that is politically positive, but for the markets, it's not the big thing that's going to make a massive difference to the overall deficit. Credit Suisse shares, we've already spoken about Credit Suisse. Forced to U-turn the government again after market turmoil. At least they've admitted they got it wrong. Stocks tumble, oil jumps in Stakes up. Well, I don't know about stocks tumble. I think that's a bit aggressive. They were lower. They're back higher. Oil jumps $3. OPEC weighs biggest output cut since 2020. Where is it in here? It was a million barrels a day. They're talking about reducing output by 1 million barrels a day. I thought that was a number, but I didn't want to commit to it. And where are we this morning? Well, European exchanges are around 0.5% to 1% lower in here, on the back of higher oil price, on the back of the fact that we closed weak anyway in the US, and on the back of the Credit Suisse news. So all of those tugging Europe, and also Tesla as well. All of those tugging European exchanges lower. And if we go and look at the US, having suffered significant losses on Friday, we've just had a slight rebound in here. So Nasdaq's pretty much unchanged, lagging. That Tesla news not helping, but we're about 0.4 to 0.5% up on the S&P and Dow going into today. I think this is quite interesting. We've been looking at the Fed tool. I mean, it's not really changing too much, but this has been creeping down, right? This column has been creeping down. I might zoom in on this one in a second. It takes a little bit of time. It's a bit laborious. And this has been creeping up. So this over here on the right is the 75 basis point cut, and this is the 50 basis point cut. If I go in now and look at the historical, let me just check on this. I can do that. The historical, and we want it for the 375 to 400. They should have a thing where you could just uncheck all of these, but they don't, unfortunately. So if I go for the 375 to 400, in here, I'm just going to uncheck all these. If anyone knows a better way of doing this, please let me know. But I don't think there is. There you go. Right. Okay. So 375 to 400. Leapt higher after we had the CPI and then the more recent Fed meetings in here. So significantly up, and it got up to like nearly 80%. We were like the higher mid 70. Oh, there you go. 72.92. Now we're sitting down at like 53%. Chance in here. So a significant correction from back lower in here. I mean, obviously you've had markets do this like a market, right? So it does swing like this, but it's interesting that it swung back noticeably lower in here. So getting close to, as we say there, we're getting close to not 50-50, but between a 50 and 75. And you would have thought, it's not far off 50-50, right? And you would have thought that the Fed, all the rhetoric from the Fed has been very hawkish. So I'm surprised that the market is now even entertaining that they might only go 50. I don't see it myself, but let's wait and see, right? But it's another month away yet. So we're going to kind of continue to follow those Fed speakers to see if we can get any kind of indication from here. What else do we want to go? Let's just run through some charts. I'm going to do a bit of a whistle-stop tour in here, guys. You can check out the levels, but generally, I'm staying kind of quite negative in here. It was a very poor close. We have gone to new lows in here this morning, but rebounded. The overnight session, you look at that candlestick. Now, if that was the end of the day, I'd be maybe thinking that this is going to go back higher. But just for the Asian session, which remember China's out, and this you've had the European session in here, so you have had a sell-off and a rebound. So sell-off, as we say, Credit Suisse, Tesla negatives, Bank of England, the UK government U-turn a positive. So we have had the market rebounding here this morning. We step into the 30-minute chart, and I think if we go and take a look where we rebounded from, where are we in here? So there was a little bit higher. So this is when that candle there, 8 o'clock my time. So it was about 4 hours ago. That was the turnaround by the government. This little blip higher back up here. But we sold off with the Asian session, and then did get a decent rebound in here. I'm not sure what drove that. That was like 2 a.m. my time. And then the market has been creeping back higher. For me, you're selling into this, right? So you've got this downtrend line. If it moves back up into this space here, I know 11,170 kind of area. You got this impulse candlestick peak up here, 11,145. Anywhere back up into this kind of area, 11,150 to 200. I think it's a sell zone in here. For a day trade ahead of the open, you probably want to be long. Remember, you got the data as well at 10 a.m. Eastern. But for me, I think there's two trades. There's probably a small long in here, running into the open and into the data, and then I think for me it's waiting for a setup for a short up here at some point. And similar story with the S&P. So we did make a new low. You have a rebound again. End of day, you take this as much more of a positive. Monday morning, Asian hours plus European hours. Am I going to read too much into this? Probably not too much right now. And then again, you've got this kind of little basing pattern going on. There's that same trend line. The market flirting with it here. Kind of seems to be respecting it. You could redraw that trend line, but somewhere up here, see the impulse point here as well, and also the old lows here and here. Okay, so somewhere in the 3620 to 3630 area, I think we're going to find resistance up there, and I'll be looking for the market to start to fade from there. If you get a rollover from here, so again, you can be long for now, but then looking probably for a short up in that area there. And then you'd be using as well in here, I'll be looking at the little kind of counter trend lines you've got in here off the lows. So in here, this one running up here, and then you could even, if you're more aggressive, you can even run this far more aggressive line that we've got running up there now, right? And you could do the same thing on the NASDAQ. Yeah. So you got the same lines coming off the lows. You got this here. And then you got the more accelerated one, if you want to be more aggressive, running up through there, right? So yeah, let's take a look at. I'd be coming into this looking to wait to fade the rally at the moment, and sitting on my hands waiting for the opportunity. Let's take a look at gold and oil. So gold in here, it's trying to, again, it failed at that resistance area, remember, on Friday. It's nudging back towards it. I think if it gets back anywhere near it, where we flagged up here, 1684 kind of area, it's where we failed on Friday. fell back from that area. And that's a 5-minute chart. Let me zoom back out on the timing on this. So there we go. We failed right in our zone up here when we identified this resistance zone from over here, and we failed in that zone. It hasn't been an aggressive failure though, but it's setting up for me. This does look like a topping pattern. So I'm still kind of negative into here, going into, let me get rid of some of this old analysis. It's reversed that trend line. Since then, you got double top pattern. It's kind of qualified the double top, then didn't want to go down, went down and didn't want to go down, but still got lower lows and lower highs. For me, I'm still looking to fade this and play this from the short side. You got this little kind of line that goes across here. If it gets back above there, it gets back above the overnight high there, 1677.8. It might have a run back up to our resistance zone around 84.85. I prefer to be, again, fading this. And again, this is the similar trade, right? It's the risk. The gold low is the risk off trade in here at the moment. And let's take a look at oil. So I clung on to that positive theme. We did get a rebound in here. We have made a new high above the last week's recovery high this morning. It's going to be a little tricky to buy this given the strength we're seeing in here this morning. But I would be, I'm far more comfortable buying it than selling it. You've got higher highs and higher lows here on the 30-minute chart. I think, a break above the overnight high, that's up at 83.32. Through that, I would just be going long through there, I think, through the break through the high. And then that could easily see us up to 85.86 kind of area going into today. So yeah, there we go. I'm going to wrap it up there, everyone. I'm going to wish you all a great trading day as ever. Stay safe out there, and I'll be back with you with another Bull versus Bear webinar tomorrow. Cheers.